What's up guys, Ben here and welcome to Motivation to Invest. Ark Invest is an investment firm which specializes in disruptive and innovative technology stocks. They manage a series of funds actively. Now that makes Ark Invest very different from many other investment firms, as they trade their stocks almost daily when they see opportunities, and they even trim their positions once they grow too large. This recently caused a lot of controversy with Tesla because Cathie, who's widely regarded as one of the biggest Tesla bulls and is the CEO of Ark Invest, trimmed her position on Tesla, and many people thought she'd lost faith. But in fact, she was just doing portfolio rebalancing. But in this video, I'm going to outline 3 very special stocks which Ark Invest has recently been buying. The reason I'm making this video is not just the fact that Ark Invest has faith in these companies, but the fact that they could be at a great price right now. Because when many of these technology stocks pull back and correct, Ark Invest, using its actively managed funds, pounce on the opportunities. So I'm going to reveal that information to you guys so you can pounce on the same opportunities. Be sure you guys watch till the end to find out whether I personally have purchased any of these stocks on my list. So if you're ready for that, let's get into it. Kicking things off at stock number 3 is Netflix. So Netflix is the video streaming giant we know and love. Their series are highly addictive and their payment model is highly efficient. But why has Ark Invest been buying them right now? Well, let's dive into their latest trades and we're going to find out. So diving into the latest trades here, this is from the 21st of October 2020. We can see here 13th on the list, we've got for their ARKW fund, they've purchased Netflix stock, 30,110 shares, which makes up 0.5047% of their ETF. Now that's quite a substantial position compared to many of these others on this list, which shows they have a lot of faith in Netflix. So why now? Why purchase Netflix now? Well, the reason for that is he's recently had a correction. Now, you might think a 12% correction is not a massive amount, but for a big tech giant like Netflix, very popular, very reliable brand, that is quite a high correction. So the stock back in February 2020, since then, the stock ran up to 50% higher, so nice 50% increase. They benefited from the lockdown. They benefited from people stuck at home, cinemas were closed, and people were watching a hell of a lot more Netflix. But now we've had this nice correction, 12% down. That seems like a great opportunity to buy, which was my first instinct. And Ark investors obviously pounced on this opportunity. So let's look at the reason why the stock has dropped though. So Netflix reported a dramatic slowdown in new subscribers Tuesday and widely missed earnings expectations, sending shares on a plunge in after-hours trading. Netflix reported 2.2 million new subscribers in its third quarter after 2 consecutive quarters, topping the 10 million mark amid shelter-in-place orders related to the global health crisis. So the number one streaming service reported net earnings of $790 million or $1.74 a share, compared with a net income of $1.47 a share in the year ago quarter. The revenue improved to $6.44 billion from $5.25 billion a year ago. However, this may seem like good numbers, but many of these stocks, especially the tech stocks, are priced for perfection. Because if analysts predict results to be even greater than they actually are, then this can cause the stock to correct, which is what has happened right here. So Netflix warned in July that the subscriber gains it experienced in the first half of the year would likely lead to a deceleration in the second half, guiding for 2.5 million new subscribers in the third quarter. Investors sold off the stock in response, sending the shares down 6.5% the next day. Netflix forecast 6 million new subscribers in the fourth quarter, which came up short of analysts' average expectations of 6.56 million. And then we've also got competition. So Netflix is facing furious competition from Apple, Walt Disney, Comcast, AT&T, Amazon, and others who are trying to catch up in the streaming market. However, there are some reasons to still be bullish on Netflix. So the production slowdown has even helped Netflix's cash flow. So Netflix continued to rake in subscription fees while not realizing the costs for making new content. So Netflix reported free cash flow of $1.1 billion in the third quarter after losing more than $550 million by that metric in the same quarter a year ago. So last year, Netflix was spending heavily to create this content, but this year didn't have to, and it couldn't. But it already had that content in the pipeline, and thus now is reaping the benefits. Netflix stated for the full year 2020, we forecast free cash flow to be approximately $2 billion, up from our prior expectation of break even to positive. Now, with subscriptions slowing down, many analysts have suggested Netflix raise their highly competitive prices. This month, Netflix stopped offering free trials in the US and raised its HD subscription rates in Canada, leading to a speculation that it might follow suit in the US. The company had no comment on potential higher prices in the days leading to the results. In a poll of 2,500 US consumers in the third quarter, 53% said they would be willing to pay more, up from 48% in the fourth quarter of 2019. This is according to Cowen analyst John Blackledge. He said in a note on October 14th. He has an outperform rating on the stock with a price target of $625 a share. So the stock is currently at $485. So that's substantial upside according to this analyst. On to stock number 2 on my list is Twilio. Now, Twilio is what's called a cloud communications platform, and I find this a very interesting and exciting stock. So with the world moving online and everything moving to the cloud, the need for companies to communicate with its customers via the cloud is ever so important.
Let's talk about how you talk to your customers. Whether you're notifying them when orders ship, providing support over the phone, or confirming their reservations by text. In our hyper-connected world, your customers want you to connect with them on the communication channels they use every day. They expect you to do it in your app, your website, and across devices, using text messages and video, through Facebook Messenger and in chat windows, with bots or live agents. 2 billion people use WhatsApp. Are you engaging your customers there? To reach your customers, you need to be on these channels securely and around the globe. But how do you make that happen on your own? Facing a complex maze of thousands of carriers, global regulations, networking gear, old protocols, expensive hardware and proprietary software is overwhelming. But the solution is simple: Twilio. Twilio is the cloud communications platform that more than 50,000 companies and over 2 million developers use as their platform for customer engagement. Using communication APIs, you can send a text, place a call, or kick off a chat from your app or website with just a few lines of code. Easily leverage every channel and type of communication that matters. And as new channels emerge, we'll make sure you can reach your customers there too. You pay only for what you use, so you can try out new ideas for just a few pennies. You get the reliability and global reach your customers demand, and you can win the battle for customer satisfaction and loyalty. With Twilio, you can focus on reaching your customers like never before on the channels they use every day. We'll handle the rest. Visit Twilio.com to chat live with an expert. We can't wait to see what you build.
Twilio has a range of fantastic customers, such as Netflix, as they use Twilio's service to send text messages to customers and emails. Twilio also focuses on what's called a cloud contact center, which is basically a call center, but in the cloud. Now, I think this is especially important right now, with a lot of people having to work from home and wishing to work from home. These big call centers full to the top of people crammed in there making calls could be a thing of the past. We could see a number of people working from home, still taking the calls from the comfort of their own sofa. And this is all made possible with what's called a cloud contact center or a cloud call center. So since our last investor day in 2017, they have seen quarterly revenue increase from $115 million to $401 million. So that's nearly a 4x increase there. Dollar-based net expansion rate, 123% up to 132%. Now, I believe dollar-based net expansion rate is how much their current customers are spending on their products and services. So they've got current customers, they're already signed up. Are they increasing their spending? So according to these guys, they are. Active customers, so they had 49,000 customers in 2017, and now they have over 200,000. So that is incredible growth yet again. Developer accounts, 2 million developer accounts, and then that has increased to over 10 million developers. So Twilio has an interesting system. I believe they have like no code, low code, or all code. And basically, these are options for developers. So if you want no code and you just want their platform and their systems to be set up for your business, you can have that option. If you want low code, so you want to do a bit of customization as a developer, you've got that option. And if you want all code, you've got that option as well. So their developer accounts are extremely popular. We are addressing a large and fast-growing market, $45 billion market 2017, $62 billion 2020. 2023, it's up to $87 billion, and that includes account security, super networks, channel APIs, email, and marketing campaigns. With our customer engagement platform, so they have solutions, they have Twilio Flex, marketing campaigns, they can do identity checks via the cloud, intelligence, operations, autopilot, conversations, so chatbots, etc. So we are powering the customer journey, 180 plus countries, over 1 trillion human interactions, 180,000 production deployments. So they can do marketing here, customer loyalty, promotions, lead conversion, identity and verification, alerts and notifications, asset management, contact center that I mentioned earlier. These are extremely interesting. So between 2017 and 2020, they've achieved a 60% compounding annual growth rate, which is incredible. 46% Q2 2020 year-on-year revenue growth, which is also incredible. So generally, I say growth stock is anything above 20% growth on the revenue. This is 46%. So they said the global health crisis is accelerating digital communications. And I do see that. A lot of people with this global health crisis going on, they don't just see these technological platforms as an option for them to perhaps use for their business. They're now a necessity. All companies must be using these platforms or they just will lose contact with their customers. So secular tailwinds are accelerating. 90% of companies said their digital communication strategy is accelerating by an average of 6 years. 95% seeking new ways to engage with customers. 1 in 3 companies are using live chat and IVR channels for the first time. So we also saw this with the Robinhood platform. They had a lot of bad press because a few people had problems with their accounts and there was no direct phone number to contact them. Now, that could be solved with a company like Twilio because they could give them a live chat facility. They could give them a remote contact center so then their customers could contact them. There are also some other interesting tailwinds which could be coming in the future. So we've got mass notifications. So if these companies have got millions upon millions of customers and they want to send a message to all of them at once, that can be done with Twilio. Telehealth. Now this is a massive area. So rather than going to the doctor's waiting room, sitting there for hours, or going to the hospital, you can simply do it all online. So you can have a consultation with your doctor via sort of Zoom, and that helps with their telehealth services, remote contact centers, contactless delivery. Now, distance learning, there's an interesting company that Ark Invest has also been investing into recently, and that is called 2U. I did a previous video on them, very interesting business. So they have their usage-based model. The idea with this is that as a business expands, so if it's a fast-growing company, it can gradually increase its cost and gradually increase its spending with the company. So the company will benefit, Twilio Stock will benefit from this extra income from the fast-growing companies. But from the customer side of things, from the companies who work with Twilio, they'll benefit because let's say things start to slow down for them and they don't need as much of their services, then they pay less. So this flexible model is key and a real selling point for many of their major customers, such as Netflix. Around 50, so they're getting over a 55% gross margin, which is incredible. And that's what you would expect from a sort of software as a service type business. Several high margin products in our portfolio. So voice, 74% average gross margin, email, 87%, app services, 89%. And that is true. Whether they're sending an email to 1 million people or 10,000 people, their costs will not increase much, and that's where they can achieve this very high margins. Diving into the numbers here real quick. So we're here on Stockopedia. Stock rank of just 62, momentum 99, of course, value 18, quality 58. So yeah, so this is the same old story. We've got value not very good because obviously it's a fast growth stock. Momentum extremely high because they've got all these tailwinds behind them. Compounded annual growth rate on the revenue is 66.4%, which is incredible. So as you can see, their revenue increased 2017, $399 million, and then it's increased, predicted to $2 billion by 2020. But the company is still, it says they're operating profit negative, operating net profit negative, but they are predicted to become profitable by 2020 expected and into 2021. So they have a road to profitability, and that is expected there. So revenue forecast to increase over $2 billion, as is net income. So they were unprofitable, but now into 2021, they're expecting to start turning in a nice profit. Earnings per share is also increasing. Analyst consensus, 5 hold, 14 buy, 8 a strong price, and nobody's saying sell Twilio. Current ratio, this is what I love to see, 7.29. So current ratio is your short-term debts to your short-term assets or your short-term cash. So it's how much cash does the company have on hand to pay off its short-term debts. That's those due within 1 year. Now, generally, I look for that number to be around 2. So that means the company can afford to pay off its short-term debts at least twice. This has a 7.29, which is incredible. It means it has one of the best balance sheets around, plenty of cash on hand to continually reinvest into expanding the business and innovating with their products. Now, we'll look at price to sales here because there's no point looking at PE because the company is still classed as unprofitable. Price to sales, so 30. So you are paying a high premium for this growth. So you're paying 30 times its sales, which does add an extra risk when investing into these companies. The share price was around $128 in February 2020. Then it increased up by 163%. So that is a massive increase there in just a few months. Now there has been a slight pullback. So it has been a slight pullback. Let's see how many percent that is by. Nice 12%, 13% pullback. So that could be a good opportunity to get in there. But remember, the stock is still up by over 132% this year from its current level. So just be aware of that. The market cap is still relatively small though, $43.77 billion. So with small market caps, it means you get probably a lot more higher upside with the stock. There's a lot of room for the company to grow, but you also get higher risk, higher volatility. But that's the risk with investing into these type of businesses. So the last stock I'm going to talk about, which is number 1 on my list, is Pinduoduo. Now this is a social commerce giant based in China. So imagine you get Amazon and you combine it with the social networking power of Facebook. Take that to a smaller scale and you have this company, Pinduoduo. They have a unique system of social shopping where customers can form teams through social media in order to get discount on products and services. Now, I did a previous video on Pinduoduo, so I won't go into too much detail on this video, but be sure to check that out. I'll leave a link above and I'll leave a link below where you can check out this company. It's a fantastic company right now and one that I extremely think you guys should check out. So overall, these are 3 fantastic growth stocks which Cathie Wood has been buying of Ark Invest. So have I bought shares personally? Well, I only previously had a very small stake in Netflix. So during this correction, I have bought the dip and increased my stake in Netflix. I've also bought a stake in Twilio as I think they're a fantastic company and extremely innovative. Although I am aware that due to its high valuation, this does add an extra risk. And I've also bought shares in Pinduoduo as I believe that's a fantastic company which takes advantage of the growing middle class in China and the massive population, the world's largest at over 1.42 billion people. They've also been hardly affected by the global health crisis in China, which is pretty ironic. So what are your thoughts on the stocks I mentioned in this video, and which are you buying? Let me know in the comments below and I'll join in the discussion. Now recently a lot of people have asked which platform I use to invest in stocks, and to be honest with you guys, I use a few different platforms, and I think this is a great thing to do because it diversifies your risk with investment services. So if you use a lot of these free trading platforms, we've recently seen Robinhood has been hacked and various other situations have been happening, the best thing to do really is to have multiple platforms and invest a portion of your funds in each platform. So recently I've really been getting into eToro, and they're also a sponsor for this channel. So the reason I like eToro, they've got 3 unique properties. The first is that you can do copy trader, where you can basically copy successful traders' portfolios and get amazing returns. The second is they have ready-built portfolios and ETFs, such as a gaming portfolio, a healthcare portfolio, and all the other stocks we know and love. The third reason is you can invest into crypto. So that's quite unique for a stock trading platform, as many of the others don't allow you to do this. So if you wish to check it out, I'll leave a link below in the description. Once you sign up and deposit, it's completely free, and that does help to support the channel. And if you enjoyed this video and you found some value, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm. And if you want more investing tips and exclusive stock market picks, which I'm personally investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.